All right. Welcome, everyone, to TradeView Live, episode 9. This is going to be a unique one. Today's a solo episode. It's the height of the summer. We have vacations and travel, and Tyler and Kyle, who normally join me, are not available today. So I'm not only your host, I'm your commentator. I'm going to be driving the slides. I'm going to be answering questions. I might have to jump between different tabs. So be patient with me. But my name's Ben Tracy. I lead strategic business development at Vizion. Thank you all for joining. So, TradeView Live. Well, why don't we answer first what we typically answer, which is what is TradeView? TradeView is Vizion's newest offering for global trade intelligence. We source over 57% of all container shipments globally. We have profiles on over 1.5 million different companies. We have 90-day forward-looking trade forecasts and all sorts of fun tools to deliver insightful commentary, analytics, and trends into the flows of container shipping all around the world. So where does this data come from in TradeView? Well, it comes from many different sources. You think about what bookings represent, which is a shipment transaction facilitated by a transportation management platform, typically between a shipper, a forwarder, or an NVO, and a carrier who can confirm that booking. We bring in vessel satellite information, geofences for ports around the world, performance metrics about congestion and transit times, information about the cargo inside the container, all to give you a complete picture about the flows of container trade. And what allows us to forecast the future is really a breadth of knowledge and data expertise that Vizion's been building for the last 5 years, from historical patterns in the way that shipments travel over the water to scheduled departures and scheduled arrivals that we receive in our shipment transactions, all the way to the modeling that our data science team has been doing recently to actually predict arrivals in the case of US imports. So all sorts of forward-looking trends, predictions, and performance metrics inside of TradeView today. So let's go into what's happened over the last 2 weeks since we last met on the previous episode of TradeView Live. There have been a lot of announcements, a lot of threats over X from President Trump on what tariff may or may not be enacted and when. And we continue to see trends that we saw emerging in the most recent episode 2 weeks ago, which is that, number one, global bookings, right? So imports and exports all over the world are relatively stable right now. However, US import bookings and more importantly, China to US bookings are continuing to drop. After that initial surge, which now we don't even see represented in the last 5 weeks, after the reprieve in the 150% or 125% tariffs were put in place, we saw an initial surge, but then a quick drop off because the deal that was sort of teased out still has not really been offered in its complete detail. The trade agreement with China, what exactly we're going to do about precious metals that China has an embargo on, what exceptions are going to be made for what types of goods. We're still lacking a lot of clarity. And compounding that now are all the letters that were sent out last week to 25 of the US's largest trading partners, not only countries, but including the trading bloc of the European Union. So you have that. You have potentially a lot of new tariffs that seem to be indicated. They might go into place August 1st. But again, if new trade deals are agreed upon before August 1st, then maybe those advertised tariffs would be lower, just a lack of clarity. And so two things are happening. Import bookings are continuing to drop And in fact, now we're down 16% year over year for the most recent week of July 7th in comparison to that week from 2024. Keep in mind, we were well into peak season at this time last year. And the same for China to US. We are down an additional 10% in the most recent week, and now down as much as 30% year over year for the most recent week. So bookings continue to drop, and in all likelihood, we will not even see a peak season at this point because of how late we are into the season. There was a comment made yesterday by Gene Soroka, the executive director for the Port of LA, that it's simply too late for orders to be placed now for end of year holiday goods, Black Friday sales, certainly back to school supplies, but all of the typical shopping that happens in October, November, December, we've passed that point of being able to get those goods in before the end of the year. So more than likely, we're not going to even see the peak season that we saw last year. So what does that look like in comparison to the last 2 years in a larger historical context? We see a couple of things. We're returning to a period that mirrors 2024 when you compare the blue line to the orange line. And we're still a little bit above 2023. Again, global bookings not showing as much of that volatility. That looks very different when we compare US imports to the previous 2 years. And again, we saw this beginning to emerge 2 weeks ago. 2 weeks ago, we were at this inflection point where the blue line of this year met the green line of 2023. The green line representing the peak season that began to build at a normal time 2 years ago. But we are well below the peak season that was in its height, in fact, in the summer of 2024. So we are now, to fast forward 2 weeks, we are not only well below 2024's numbers, but in fact, we're below 2023 as well. So we are seeing shipping volumes drop to a point at this point in the year that we've not seen for 2 years. And that is even more pronounced in the China to US bookings, of course, echoing the charts we've seen already, but we are now well below not only 2024, but also 2023 numbers. Again, 2023, you saw this peak season. 2024, we saw this sort of front loading occur in the fall. And it does not appear that that front loading behavior or that peak season behavior is going to emerge. So we could see China to US bookings continue to drop to very low levels not seen in the last 2 years. Okay, I don't see any questions. So we're going to move on to a quick glance at the last 12 months. According to TradeView data, who are the US's top import trading partners? Again, I mentioned that there were 25 or so letters sent out in the last week and a half to countries as well as the European Union. And the question was, which of those countries are actually on this top import trading partner list? And not all of them are. So Mexico, in fact, we're increasing our imports with. We're offering much more attractive trade deals with Mexico, although it will still result in an increased tariff. China, of course, is the largest part of this pie chart that is continuing to drop. And then we have South Korea and Vietnam in there that we announced, or South Korea received a letter, Vietnam we announced a deal with. So let's go to the countries that actually received these letters. And what were the changes from the reciprocal tariff rate to the new tariff rate? Again, you see African nations in here like Libya, South Africa, Laos. You have Iraq and Cambodia, Brunei, and actually Brazil, which has gotten a lot of attention because of what was, again, threatened as a potential 50% tariff rate, which would go into effect August 1st. But to go back one slide, Brazil is not on this chart. Who else? Laos, Japan, not on this chart. So we're making these threats. We're potentially looking at increased tariff rates for certainly a large trading partner, but not one of the top 10 as far as container imports into the U.S. I want to double click on the Brazil relationship as an example of using TradeView to go deep into the import patterns, the breakdown of what's in those containers, what industries and sectors and different product categories do we think are going to be impacted if, in fact, we quadruple the tariff rate from the current 10% to 50%. And so this breaks down the last 2 years for the HS codes representing the cargo inside the container of all containers imported from Brazil to the US. Wood represents by far the largest product category. And so when we think about wood, we think about building material, we think about what's used in a lot of paper products, pulp, paper towels, cardboard boxes, but certainly I would think building material for residential and commercial construction, and in general, the construction industry could be negatively impacted and could face additional costs because of just how big of a chunk our imports from Brazil represent. Now, an additional question I probably want to follow up on this, if I were to go one layer deeper, would be for all wood, so HS code 44, that the US imports, is Brazil our biggest source? Like, is it top 3? Is it top 10 even, right? So yes, we mostly import wood from Brazil, but do we get more from another country or from another source? We also see other construction material like stone. And just behind stone, we have a commodity, coffee. Now, we know that coffee comes from many other places all over the world, many other countries in Central and South America, African nations as well. But the extent to which 9% is, I don't know, a drop in the bucket, or 9% potentially of all the coffee the U.S. imports, because obviously the U.S. does not produce or grow any coffee domestically, we could see that impact the price of coffee on shelves. Again, if you're looking at coffee now facing 4 times the tariff rate that it faces today. Other sort of close to coffee as far as the size of it, we have meat, again, another food product. So food and beverage, we've got meat and coffee. And then similar to wood, I think a related HS code would be paper and other building materials like rubber and, again, pulp, wood pulp. So I do see a lot of agricultural products in here as well that have smaller percentages like fruit and sugar. But again, if I kind of say what's the takeaway here, I think you're looking at the construction industry, the cost of building materials potentially going up if in fact this threat follows through, and wood is not given any sort of exception. But we begin to apply that 50% tariff for all wood products starting August 1st. So I want to pause here, go over to the comments chat. Sammy's going to flag me if there are any questions or comments, but nothing so far. Thanks for being patient with me. So let's flip the script here, because Brazil has similarly threatened in retaliation to apply, I believe, a 50% tariff for all products exported from the US going to Brazil. Now, I don't know to what extent Brazil represents a large destination for all of US exports. I know we export a lot to Europe. I know we export a lot to China. I don't know where Brazil ranks in our top export partners. That would be maybe another graph we can break down. But of the products we export to Brazil inside of shipping containers, plastics, which would represent petrochemical products and derivatives used from the oil and gas industry. So you think of like polyethylene type plastics that are produced by companies like Dow Chemical and ExxonMobil. Those are the types of goods, as well as, of course, consumer products. Those are the types of goods in this HS code, which represents the lion's share, the vast majority. It's not even really worth diving into some of these others, except for maybe machinery, which could be really high value. Even though it's only 9%, machinery could be very high value. You think of like Caterpillar manufacturing here in the US. Of course, other automotive parts. That type of machinery could impact a few companies pretty significantly if they're looking at paying that higher tariff rate. But I would say the plastics industry, as one of our main exports to Brazil, is the one that's going to be most severely impacted if, in fact, Brazil retaliates beginning August 1st, applying this 50% tariff to all US exports to Brazil. Not really much else in here. It is interesting that I see rubber, but rubber is also something we import from Brazil. So I guess there's a back and forth there of different rubber products. And then we do see finished vehicles as a small percentage of the overall volume of TEU, but again, high value cargo in those containers. Okay, so that's our deep dive on Brazil. I think there's other things we could do here. Send us some messages. Feel free to reach out to me if you want to see more on Brazil, or if we should continue on this trend of like a deep dive into a particular country. There's just been a lot of commentary and attention on this 50% threat. And, my question was, well, what industries are impacted? What products are impacted? And how do we see that behavior now change? I know it's only been a few days, but have we begun to see bookings for shipments leaving from Brazil going to the US begin to drop? So these are Brazil exports to the US, and we don't see very much of a change right now. Pretty stable. It's dropped a little bit since June. I think that's relatively seasonal for this time of year. So the rolling 7-day average of TEUs booked each day, staying right at about 10,200 per 7 days. And then these are imports. And so I'm sorry, these are export bookings to Brazil from the US, imports from Brazil back to the US. So imports are dropping a bit from where they were just a few weeks ago, but that was actually before this 50% tariff was threatened. So I think that pattern of decline was due to something else, likely seasonality. In fact, the rolling 7-day average has ticked up just a little bit. But we'll continue to watch this number to see if the exports to Brazil or the imports from Brazil drop off significantly in the next 2 weeks. We'll come back to this. I'll just make a note. Sammy, you can remind me to revisit this on our next episode in 2 weeks. Let's look at a region instead. So there's been a lot of talk about our agreement with Europe. Europe is not going this sort of retaliatory route that Brazil has taken. And we just go back a little bit further, the recap here. So EU, we're increasing from 20% today to 30% beginning August 1st. So a little bit more of a measured approach here. What products do we bring in from Europe that might be impacted? We have beverages. So think of maybe certain imported beers like Heineken that are brought into the East Coast of the US, likely going to face higher costs. Heineken's already pretty expensive for someone like me at the grocery store. So the fact that it might be going up even further, I'm less likely to purchase a product like that myself. We have some machinery and vehicles, probably related HS codes here. In general, the automotive industry likely going to be impacted unless, of course, there are exceptions made. Together, this represents 27% of all our imports from Europe. equal to the beverages, namely the beer or the alcohol-related beverages that we bring in from Europe. There are some sort of outliers here. We got plastics, other food products like baked goods, processed fruits and vegetables. But I would say the two things to take away here, that products might be getting more expensive. I would look at alcohol, and I would look at the automotive sector. Let me pause real quick, see if there are any questions. There was a comment made that I believe we source nearly 3/4 of our pig iron from Brazil. Interesting. So my question would be if that's inside of ocean containers or not. That might be, if I go here, import products from Brazil. So pig iron, I'm not seeing where that might be in here, unless pig iron is referring to that meat product. That might be where that's coming from. Thank you, Eric. Moving on to bookings for iron and steel. So we had mentioned this 2 weeks ago as one of those goods that is now going to see an increased tariff. We're trying to target metals specifically, especially with the news about the Nippon Steel merger that's been approved by President Trump. We're trying to beef up the iron and steel industry in the US, trying to protect it more and offer additional benefit for American production manufacturing here domestically. So an additional tariff now up to 50% has been in place for just about 5 weeks. Since then, global bookings, so from any origin to the US, for these products has continued to drop significantly. Now, we're not seeing much of a change week over week. This is at a rate of decline that's actually pretty flat. But in comparison to the year before, which again maybe was all that front loading that was occurring, we are dramatically below last year's levels. And that's for HS code 72. A related HS code, so these are more finished products for iron and steel. Similar numbers, 44% down for the most recent week, 35% from the week before. Very similar numbers here from HS code 72 to HS code 73. In fact, we're seeing additional declines in the most recent week. So for iron and steel products, HS 72 and 73, the story that began a couple of weeks ago has continued, which is that bookings are continuing to drop. Let's look at aluminum as well, because I think that was added to the most recent tariff. So yes, this has been in place since June 4th. Aluminum also down, not quite as much in comparison to the year before. I think there are other things going on in this product category that might be contributing to less of a decline, but still down almost 20% from the year before. And then copper. So this just started 2 weeks ago. HS code 74. We have a 50% tariff on all copper brought into the US. And we're seeing a decline in the most recent week. But in fact, this represents an increase from the year before. So, and again, the TEU here are much smaller in volume to what we were seeing here, 6,000 plus TEU. In the case of copper, we're looking at less than 1,000 TEU per week. I know copper is also shipped outside of just containers, containerized freight. So there could be a drop in some of that dry bulk that's being shipped as well. So that's a deep dive into those metals. We'll come back to Brazil in 2 weeks. If there are other industries, products, it sounds like maybe pig iron is something we could dive into. Let us know what you want to see. I'll be out of town next week, but I think we'll be back to our regular schedule, Kyle and I joining you all in 2 weeks' time. So thank you all for joining. We'll see you in 2 weeks. All right. Bye-bye.